So I've used this as a slide because I thought this was quite interesting really, because this is the estate I started my investing on. So when we first started, I was trying to source properties under the stamp duty threshold, 125,000, 3-bed properties, market value of about 135. So I was saving the investor £10,000. And the rental income, depending how you rented it out, whether you did it per room or as a family let, between £600 and £1,200. So it was a good, attractive yield, and we were selling them very, very, very well. That was up to about 2007, 2008, and then woof, we hit the financial crisis. So all of a sudden, they went down to 80,000. Now, the question is, would you buy a discounted property? So in other words, you would buy that property at 125 because it's discounted, because it's really worth 135. At 80,000, it isn't discounted because that was the market valuation. Now, the yield has obviously increased because the rent's actually gone up. But could we sell them? No one wanted to buy them. The reason people didn't want to buy them was because they weren't discounted, and of course because would it be worth 70,000 next year? It's quite volatile times, finances was more difficult as well. But it taught me a really valuable lesson. When I started, I focused totally on cash flow. So I wasn't really trying to negotiate a particular discount when I started. I started obviously a little bit earlier and was purchasing them at 100,000. So my goal was to achieve income very quickly for me and my brother, so we didn't have to rely on our shop. Because I could see that we were not going to get wages coming through, or our business might not be sustainable over the next couple of years. So I went very quick. I didn't worry about discounts, I worried about cash flow. So when I started to sell to investors, all their focus was on discount. I won't buy unless it's 10% or 20% below market value, 25% market value, and that was the theme of that time. So there was lots of people, if you could demonstrate a 25% discount, they bought. They didn't worry so much about their yield and their discount. So anyway, our business, which we then started, could come to a full stop because we can't sell properties. So me and my brother went back into the market and bought them ourselves at 80,000, because what I had learned, a very important fundamental lesson: if a yield is very attractive and your cash flow is high, don't worry so much about the discount. And lo and behold, 3 years later, when everyone told me property prices would never go up again, they've doubled in a shorter period than any other time that I can remember. And of course, rents have also gone up, so the yield is even more attractive. And of course, also what happened was interest rates plummeted like a stone, so our borrowing costs also went down. So all of a sudden, my life was changed, because my own property portfolio obviously become very high cash flowing, and I did, at the time, the opposite to what everybody was doing. When I say everybody, I mean people who paid a lot of money to go on courses and to be taught something completely different.